The goal of this portfolio is to invest only $50,000 and turn that into over $1 million. So in this video, we're going to look at the best ETF to do that, because this ETF I'm going to show you does not have NAV erosion, and also it does pay a pretty good and steady dividend, and does also increase its distributions. So that's very important. And also I'm going to show you how long it's going to take you for that to happen. So let's start. First thing, let's look at this ETF return since it came out. So this is NEOS NASDAQ 100 high income. The price of today is 54.20. If we look at this ETF return, total return with a drip, meaning you reinvest all your distributions, you have returned 44.6 since it came out, of course, and that's compound annual growth rate of 20%. That's very impressive. Remember, the NASDAQ ETF itself, which this news calls on, does not return 20%. And I'm going to show you a comparison between this ETF and the NASDAQ. If we look at the total return with no drip, meaning you just take your money and then your return is at 38.5, so still very impressive. Share price has grown by 8.5%. That's compound annual growth rate of 4.28%. Very little, but of course, this ETF pay distribution. So we take that distributions of 20.27, compounded that with the share price return, we're going to get overall return. Now, dividend has increased by 7.1%. And that's only at 3.63. Not that impressive, but overall return is what we are looking for. If we look at this ETF market cap as of today, is over 5 billion. So it's a big ETF and it's very popular. If we look at the price movement here, as you can see, I extend to all the time, of course, since it came out. So if you invested $10,000 at that time when it came out, January 31st, 2024, your $10,000 would be 14,464, and that's about 45% return. It's pretty good. Here on Google, we can see periodic return. So if we look at just today market was pretty much flat. It did gain about 37 cents or 0.69%. If we look at the 5 days, it has returned negative 0.17 or 9 cents down. 1 month has returned 0.23 or 13 cents. But again, this return is just a chart return. It does not include the distributions. If we extend to 6 months, it has returned only 3%. If you add your distributions and dividends, then of course it's higher. Year to date, so this is from January 1st to today, about a month, it has returned pretty much flat, only 44 cents, less than 1%. If we go for 1 year, it has returned only 3%. If we go to 5 years, this is the max since it came out, only 8%. Again, so if we go to Yahoo Finance or Google, if you look at the chart of this ETF without having to consider its distributions, you're going to be misled, because this, as you can see here, this is just a price return. It does not include all distributions. For people who want to know total return of these income ETFs, you have to go to their website and see overall return. So now let's go to NEOS website, Award Winners ETF 2025, Best New Active ETF. This ETF, of course, is actively managed. NEOS NASDAQ 100 High Income ETF, QQQI. And by the way, this is one of the best performing income ETFs for 2025. If we look at other details, distribution average total return. So we look at the distribution frequency, it does pay monthly. This is now weekly. So for people who are looking for weekly income, again, there are a lot of ETFs that I've covered, I've talked about on this channel that do pay weekly. For this ETF, we pay monthly. But again, monthly and weekly really doesn't make that much difference. Overall return is what we are looking for. Expense ratio 0.68, so very little, is not that much, because some other ETFs, like a lot of yield max ETFs and some round hill ETFs, they are over 1%. So this, you save a little bit more here. Remember, if you put a lot of money, then your expenses really matter. Distribution rate is only 14.11%, but I'm going to show you the magic compounding of this 14.11. It might be a turn off for other people who are looking for higher yield ETFs. They're looking for like 20, 30, 40, 50, up to 70 or 100%. But as we've learned, the higher the distributions is very risky. We've seen, like, for example, MSTY, it was paying over 100%, 200%. But guess what? Overall, you are very down. You've lost a lot of your money and it's in negative. So get a little bit of distributions, but your ETF keeps growing. So you're making an income, but at the same time, you're growing your ETF or your capital. Here are more fun details. QQQI was incepted January 30th, 2024. So it has been out for about 2 years. Gross expense ratio, as I've shown you, is only 0.68. Net asset, how much this fund has accumulated as of now. This is updated version of the first website I showed you. It's 8 billion. So it's not 5 billion, it's over 8 billion. Very impressive, because the bigger the fund, meaning a lot of people are trusting the fund and there are a lot of people investing. The funds that don't do well, they always lose their net asset or AUM, because people are not trusting and they keep selling their fund and buy other stuff. But we can see this one, it keeps growing. So this is a good sign. Primary exchange is the NASDAQ. This is where it trades, and underlying exposure is a NASDAQ 100, as the name suggests, QQQI. And distribution frequency, as we've seen, it does pay monthly distributions. So again, for people who are looking for weekly distributions, there are a lot of other funds that I have talked about on this channel. So just check more videos about weekly distributions. So here on NEO's official website, we can see there are two types of return. There's inception, cumulative, and there's annualized return. Annualized, this ETF has returned about 20%, as I've shown you earlier. At the very bottom here is the NASDAQ. So NASDAQ has returned since inception. Of course, NASDAQ has been out for a long time, but it has returned about 21.32. This is within these 2 years this ETF has been out, right? Comparing. But overall, the NASDAQ, if we extend over a period of 10 years, NASDAQ has only returned about 14.2%. These couple years has been good. And of course, there has been a lot of volatility. But if we look at the cumulative, this is including your distribution. This fund has returned 43.20. And NASDAQ has returned 47.43. So the NASDAQ here has beaten this fund, even including the distributions. But again, you're talking about NASDAQ. This is an ETF that is designed for growth. For people who are looking for income, they love an income, so you can compare between the two. But these are the numbers. So if you want to compare between the two, which one has done better? If you're a growth investor, I would just go with the NASDAQ. But if you want to have maybe growth and some income, then this fund is going to be good for you. But I'm going to show you a better way to beat the NASDAQ, and this is the method I'm going to show you next. Again, if you find value in this video, please make sure you subscribe. And if you like this content, please smash the like button. And here is a projection of your growth of $10,000. If you invested $10,000 since this ETF came out, this is how much. At one point, it went to over 12,000. Then it crashed all the way down to less than 10,000 of your original investment. But if you hold into your investment, guess what? Your ETF or your $10,000 would have been over 15,000 by now. So let's say you panicked and you sold here, you would have lost a lot of money. But if you hold, and this is where you would be today. And this is just within 2 years. It's not that long. The last thing I want to show you here is dividend and distribution history for QQQI. As you can see, January 24, this was the first payment for 2025. They pay 62 cents and it went to 64 by December 26, 2025. And we go to distribution of 2026. The first time they paid was January 23rd. That was just last week. and they did pay about 64 cents. It's solid, it's pretty much solid and very predictable of how much they're paying. You'd expect the next distribution that they're going to pay on February 20th, 2026 will be around the same, 64 to 65. So it's very good and predictable how much you're going to get. It's not one of those ETF that they pay very high today and tomorrow they pay very low. Now let's go to a fun part. This is going to be your income projection. I'm going to show you how you can invest only $50,000 and that to make that into $1 million portfolio. Again, this is just a prediction based on the return that we had. There's no guarantee that your $50,000 will turn into $1 million. There are a lot of changes that could happen, right? So anyways, what we're doing here is invest only $50,000 and monthly contribution, you're paying zero. And annual dividend yield, we're only putting 14.11%, and dividend growth rate, we're putting 3.63. Annualized share price is 4.28. Number of years, we're investing for 20 years, and maximum dividend you're going to get is 14.11. Now, you can always play with these numbers. You can put, let's say, for example, if you want to reduce the number of years, then of course you're going to put, let's say, 100,000. Then that will reduce that portfolio from 20 years to 10 years. But let's say, for example, you want to put low amount, then you're going to increase the years here. Then of course you're going to have the same result. So now the first year you're investing $50,000. With the third year, your portfolio is going to be about 60,000, and total dividend you have received that year will be 15,100. It keeps accumulating because you reinvest all your distribution. Check this. Within 10th year, your portfolio is only less than $250,000, but you just keep investing. Then your compounding interest, it keeps getting very big. 12-year, your portfolio is going to be 338, and your distribution you have received or total dividend is more than 228,000. A lot of dividend. Keep investing your money. Within 20 years, your portfolio will be 1,176,000. Very impressive. Again, these numbers here are just numbers based on the performance that we have, based on the distribution they're paying. Let's say, for example, anything changes in terms of share price of this ETF or distribution, let's say, for example, being cut or being increased, this may change. So there's no guarantee either you're going to get or either you're not going to get. It can get bigger if they increase their distribution, or if the share price of this ETF keeps going up more, or if share price goes lower, then you are not going to get the same result. So bear in mind, guys, this is a video I just want to show you how incredible QQI is. It's one of the best ETF that does not have NAV erosion. So I really appreciate you watching this video, and I really appreciate you subscribing to this channel. And also I like that you keep smashing that like button. Thank you very much for watching. I'll catch you next video. Bye bye.